Ready to unlock the next chapter of your retirement, but feeling a little overwhelmed by the financial jargon? What if I told you there's a way to simplify your registered retirement income fund, RRIF, management, making it less of a chore and more of a seamless transition into your golden years? We're not talking about complex spreadsheets or confusing phone calls to a bank. We're talking about leveraging a modern, user-friendly platform that puts you in control, Wealthsimple. For many of us, retirement is a dream we've diligently saved for, often through a registered retirement savings plan, or RRSP. You've contributed, you've watched it grow, hopefully, and now, as you approach your 71st birthday, a new acronym enters the picture, RRIF. This isn't something to fear, it's simply the natural evolution of your retirement savings. The Canadian government, in its wisdom, requires you to convert your RRSP into a RRIF by the end of the year you turn 71. Why? Because the money needs to start being drawn out. It's no longer just a savings vehicle, it's an income stream. But here's where the confusion often kicks in. How do you convert it? How do you manage the withdrawals? What about taxes? And what if you want your money to keep growing even as you're taking it out? These are all valid questions, and traditionally, they might have led you down a path of financial advisors, paperwork, and perhaps a few headaches. But in today's digital age, there's a simpler way. Wealthsimple has emerged as a game-changer in the Canadian financial landscape, democratizing investing and making it accessible to everyone, regardless of their financial literacy. They've built a reputation for their intuitive platform, low fees, and commitment to transparency. And guess what? They're an excellent solution for managing your RRIF. This isn't just about setting up an account, it's about setting up a financial future that feels less like a burden and more like a well-deserved reward. Before we dive into the nitty-gritty of setting up your RRIF with Wealthsimple, let's briefly touch upon why RRIF is even necessary. As mentioned, the government wants you to start drawing down your retirement savings. Think of it as a mandatory income stream from your accumulated nest egg. The RRIF allows your investments to continue to grow tax-deferred, much like an RRSP, but with the added requirement of minimum annual withdrawals. These minimums are based on your age and a government-prescribed percentage. The older you get, the higher the minimum withdrawal percentage. This ensures that you're using your retirement savings for your retirement and that the government eventually gets its share of tax revenue on those withdrawals. Now, why Wealthsimple for your RRIF? Well, for starters, their platform is designed with simplicity in mind. If you've ever felt intimidated by traditional financial institutions, Wealthsimple is a breath of fresh air. Their user interface is clean, easy to navigate, and makes managing your investments feel less like a chore and more like something you can actually understand. Beyond the aesthetics, there are practical advantages. Wealthsimple offers automated investing, which means they can manage your RRIF for you, rebalancing your portfolio and ensuring it aligns with your risk tolerance and financial goals. This is a huge benefit, especially as you enter retirement and might prefer to spend less time actively managing your investments and more time enjoying your newfound freedom. They also boast significantly lower fees compared to many traditional investment firms. When you're drawing income from your RRIF, every dollar saved in fees is a dollar more in your pocket. This might seem like a small detail, but over the long term, these savings can add up significantly, preserving more of your hard-earned retirement capital. Plus, their customer support is highly regarded, offering accessible help if you ever have questions or run into any issues. So, you're convinced that Wealthsimple is a good fit. How do you actually get started with your RRIF on their platform? The process is remarkably straightforward, but it helps to have a roadmap. Step 1. Gather your information and understand your needs. Before you even log into Wealthsimple, take a moment to gather some essential information. You'll need your social insurance number, SIN, your bank account details for linking, and information about your existing RRSP. If you're converting an RRSP from another institution, you'll also need details about that account. More importantly, consider your retirement income needs. How much do you anticipate needing from your RRIF each year? While there are minimum withdrawal requirements, you can always withdraw more. Understanding your expected expenses in retirement will help you determine an appropriate withdrawal strategy. Also, think about your risk tolerance. Even though you're in retirement, your RRIF can continue to grow. Wealthsimple will ask you questions about your comfort level with investment risk to help them build an appropriate portfolio for you. This is crucial because your investment allocation will directly impact the growth potential and volatility of your RRIF. Step 2. Sign up for a Wealthsimple account if you don't have one already. If you're new to Wealthsimple, you'll need to create an account. This is a quick and easy process, usually taking just a few minutes. You'll be prompted to enter your personal details, create a password, and agree to their terms of service. If you already have a Wealthsimple account, perhaps for a TFSA or non-registered account, you can simply log in. Step 3. Initiate the RRIF conversion. Once logged in, you'll navigate to the Accounts section. Here, you'll typically find an option to open a new account or transfer an existing account. You'll want to select the RRIF option. Wealthsimple makes this clear and guides you through the process. If you're converting an existing RRSP held at another financial institution, you'll choose the Transfer an Existing Account option. This is a common scenario for many retirees. Wealthsimple will then ask you for details about your existing RRSP, including the institution it's held at and the account number. They'll also likely ask for a recent statement from your current RRSP. The beauty of transferring an account to Wealthsimple is that they handle almost all the heavy lifting. You typically don't need to contact your old institution directly. Wealthsimple initiates the transfer on your behalf, communicating with your previous provider to move your funds. This process can take a few weeks, so patience is key. During this time, your investments might be held in cash, so it's something to be aware of. If your RRSP is already with Wealthsimple, the conversion is even simpler. You'll just select the option to convert your RRSP to a RRIF within your existing Wealthsimple account. It's often a few clicks, and they'll handle the back-end mechanics. Step 4. Set up your investment portfolio. Once your RRIF is set up or transferred, Wealthsimple will guide you through setting up your investment portfolio. This is where your risk tolerance comes into play. They'll ask you a series of questions to assess your comfort level with market fluctuations. Based on your answers, they'll recommend a diversified portfolio of exchange-traded funds, ETFs, that aligns with your risk profile. With that said, thanks for watching and until next time.